Hi there, in this video we will learn about what is financial liability. A financial liability is a present obligation arising from a contract that requires the entity to deliver cash or another financial asset or to exchange financial assets or liabilities under terms that could be unfavorable to the issuer. So here what is the meaning of under terms that could be unfavorable to the issuer? It means that when we have financial liability, we have to pay that. So when we are paying, that time situation is not favorable for us, so that's why unfavorable to the issuer. Or deliver under a non-derivative contract a variable number of entities own equity instrument. So what is the meaning of a non-derivative contract? A variable number of the entities own equity instrument. We can understand by looking at example number 1. What does deliver a variable number of shares mean? It means you do not promise fixed number like I will give you 1000 shares. Instead you say I will give you as many shares as needed to equal X value. So in X value we can assume, for example, 10,000. So in this scenario we say that I will give you shares that carry value of 10,000. It can be, the quantity can be depend upon the price. So for example, if shares are traded as 100, so issuer will issue 100 shares. If shares are traded as a 50, so issuer will issue 200 shares. So with this situation we have variable, we do not fix anything like anything before. For example, we haven't fixed that I will pay you the shares which will carry the fixed value of which will carry the market value of fixed amount, and that share will have fixed number. So in this scenario shares quantity are not fixed, with the same shares value also not fixed. So that's why we have variable number of shares, variable numbers of entities own equity instrument. Or enter into a derivative that may be settled other than by exchanging a fixed amount of cash for fixed number of entities own equity instrument. We can understand by looking at example 2. Suppose the option value is 10,000. One more thing, what is the difference between option 1 and option 2? We will understand that after understanding example 2. So example 2 is saying, suppose that option value is 10,000 USD. At the settlement date, if share price become 100, issuer will issue 100 share. If share price become 50 USD, issuer will issue 200 share. If share price become 200 USD, issuer will issue 50 shares. See, the number keep changing, so that is why it is variable, it is not fixed. In fixed we have, for example, we can assume that is 100 USD per share and total share 100. So quantity is 100 and amount is 100. So here it is called fixed for fixed, but here we do not have fixed, so it will call as a variable. Okay, if one is fixed, another one is not fixed, still it will call as a variable, and we will consider this under financial liability. When both are fixed, amount as well as quantity, that time we can consider this either financial asset or either equity instrument. It's depend upon the nature. So the company is effectively saying I will give you share worth of 10,000 USD, whatever number that becomes. This is not equity. So in equity we both in equity the quantity as well as price both are fixed. When price and quantity both are not fixed, it will not consider as a financial liability. It will not consider as a equity or financial asset. It will consider as financial liability. So what is the difference between option 2 and option 3? So here in the option 2 they are clearly saying that non-derivative contract. Here they are saying that into a derivative contract. So here derivative contract is not there, it is just variable number. Example, you said that you will issue your shares to set off your liabilities, but you didn't specify how many shares you are going to issue. So in this scenario your commitment is variable here. In short, a contract that forces the entity to give up value, cash or financial asset, or to issue variable equity or a non-fixed for fixed equity settled derivative. Thank you for this video. In next video, we will learn about what is financial asset.